investment experience and know the local landscape. So I think this is a sort of fundamental shift, and hopefully, probably here to stay, and over time, these could become some of the competitive, more competitive VCs and private equity investors in the U.S.
2017年，我想对于中国大部分的高净值客户来说，我们有一个很大的一个趋势，就是要把钱一部分移到境外，然后也有一个很大的挑战，就是中国政府限制了把钱流出来，但是这个事情还是一定会做的。所以我想，我们第一任务就是把一部分的产品放到了境外，这是第一个趋势。第二来说，我们到硅谷怎么来做？那我想公司从今年开始已经在美国设立公司，到了硅谷以后，那肯定我们是希望在硅谷是做更多的一些高科技的股权投资。那么我们的方式非常灵活，我们可以跟这里的 GP 合作，管理公司合作，也可以自己投企业，也可以转让大家的一些份额，或者过去已经投过的一些好的企业的份额，我们也都可以。总之，我们想把这些好的企业能够带给中国高净值的客户投资。
As Erik has mentioned about the Chinese monetary control, that is happening, that is true. However, it is necessary and it's a must to bring the money out from China and invest it in the Valley. And as for Jupai, we have three major ways and challenges. Number one is to keep attracting Chinese investors and give them confidence to invest in the Valley and in the United States. And number two is, regard to the high-tech industry in the Valley, we have a lot of confidence and wealth as well. And it is our mission to transfer the money from China to the Silicon Valley. And the third perspective is, we are a very flexible firm. Flexible means we have various products and we have various methods to do business, either in China or the United States. We can either, within the Silicon Valley, we can work with the GP, we can work with a local management fund. We are willing to partner up with any wealth management company in the Valley in order to reach the goal of transferring money from China to the States and sharing the wealth management.
Okay, so picking up on that point in terms of next question, talking about how to manage and how you structure the fund or fund of fund, and in terms of the relationship with the LPs, GPs, or the cross-border relationship.
Maybe I'll jump in first since I didn't get to say anything on the last question, but that's okay because it kind of segues directly in. What we see, again, being more on the ground at the VC level, especially with sovereign wealth or Asian funds and such, is a huge interest in basically getting visibility into deal flow. Because what we see oftentimes is that since we're here in the Valley and have decades of experience here, we have a network, and a lot of that is getting into the right deals, because it's all about selection and finding the right ones. And that's where we bring our value, and that's how we get why the dollars come in. The one thing that we're also seeing is another trend in that space is a great interest in co-investing. So as well as part of going back to structure again, where we have the fund and we invest in, but then also LP potentially can co-invest on the side without the management fee charges and such as that, but because they have access to the deals that we are able to discover and find. We see that as a great way of being really synergistic, especially in the space that we're investing in, which is hardware, which is a little bit more capital intense. And so that need to be able to bring more dollars to bear for the winners is really important, and having LP partners who have that capital available has worked really well.
I think there's a buzzword right now in the space that I inhabit with big pensions, sovereigns, endowments, and that's just alignment. So alignment of interests is kind of what all the people on the LP side I think are really focused on. If you'll permit me a story briefly, this idea of carried interest and the 20% carried interest goes way back to the era of ship captains. Because the people would finance these ship captains to go off to the Indies and collect spice, and in return for making it back alive, the ship captains would be given 20% of whatever he, and it was usually a he, literally carried back. That's the carry component of the venture capital structure. And it created a really interesting incentive whereby the ship captains would go down with the ship to protect the cargo. So you can imagine the asset managers literally giving their lives to earn that carried interest. Let's juxtapose that to today's model of carried interest, where GPs are stacking funds on top of funds and driving Ferraris, and whether the fund works out isn't really of interest. Well, the LPs are paying attention now. They're doing all kinds of creative things to try to get back to that alignment. No, they don't want you to go down with the ship and kill yourself, but they definitely like you to suffer a little bit alongside them if the assets go to zero. And they're happy to have you flying around in a private jet if you've earned it. But that word alignment is key.
I could take it. One joke about that is when we did tell one of our investors about alignment. We said, if you have a good meal at a restaurant, don't you tip 20%?
What if you give us a cheeseburger?
Yeah, exactly.
Do we still have to pay you 20%?
Just a little different perspective on how I look at this question in terms of structure, because we're real estate, and usually what we typically do is we've been trying to build platforms. For instance, we had a fairly large transaction in the manufactured home space where we recapitalized the company. It was a little over $2 billion company. We recapitalized it with a couple of existing investors, and we took in 2 foreign sovereigns into it, and they want a tax-efficient structure, clearly alignment of interest with the whole management team. But they also wanted a vehicle similar to what you're chatting about, where when you have a platform, you can add on to that platform. So they want to see an ability to grow and expand it. So we've done that with, as I mentioned, a manufactured housing platform. We've done with a land company, and we're doing it now with an industrial platform. Same idea, tax-efficient structure. It's a little bit different in terms of the structuring. Most of the foreign investors want tax efficiency with respect to being able to get the capital out, and there's all different rules and regulations around which countries have certain treaties and sovereign agreements, which could change depending on if the tax legislation that's being pushed forward for things like this Foreign Income Property Tax Act changes a little, like it done about 2 years ago for foreign pension funds that might open up a little bit more. If that happens, you'll see even more money coming over from a variety of different sources that can play in the U.S. Real estate markets from our side, and probably from everyone else's side too.
I love the carried interest story, and as a VC, we say, hey, our alignments are perfectly aligned. We make upside. We make money, you make money, everybody's happy. So on the ground now. Most of my career being a GP, now I'm back sort of on the other side of the curtain, and I'm an LP, I'm a fund manager, and I'm saying, wait a minute here, let's take a look at this. Now, I think the challenge in the market right now is there's so much capital, so institutional capital, and it's like topic of the panel here is also sovereign wealth funds that are ever more present, and Chinese investors that are increasingly present, and others. There is capital, and it's a market. I mean, it's an efficient market. So you try as an LP to say, hey, how can we work together? How can we greater align our interests? And sometimes that can mean helping a new VC firm or a new firm GP to get into the market and co-sponsoring their first fund through getting part of the GP. But at the end of the day, the VC as an asset class is the most sort of persistent, consistent returning asset classes in the world. And it's because VCs have personal relationships with entrepreneurs. It comes down to that individual person level. And a successful VC that has a top quartile performance fund is quite likely, much more than any asset class, to have another top quartile fund in the next fund. So the VCs ultimately have a lot of market leverage, and with a lot of capital coming into the market, in practice, if you want to get into Excel or Sequoia's fund, you're not going to argue about the terms. And now things are changing because there are newer funds that are coming up and getting great returns more quickly. But after they have good funds, you very quickly find that they also have leverage over how the terms work. It's an interesting dynamic.
好，那我来说说中国非常有特色的，也非常强劲的高净值的这群 LP。第一个，这些 LP 肯定是不容忽视，但是呢，我们也是在不断的教育，这些 LP 也是在不断的成长。我想跟美国的很多的机构是完全不同的。第二个呢，我们能做的是，根据这些 LP 的特色，其实我们在很多的投资跟产品上进行了不同的设计，以及分类和层级，使得这些产品能够满足我们不同的这些客户的这个需求。因为他们的成熟度不同，需求不一样，所以我们就设计不同的产品，所以也能够迅速的得到成长。所以我想，不同的资金，我们在做投资的时候是不一样的选择。
Folks wish me luck. Number one, we think that the maturity of Chinese LPs are not quite as competitive or comprehensive as the United States LPs. Therefore, we are dedicated to educate and to keep encouraging and actually reinforce and help them become more competitive and mature. And secondly, as we mentioned before, with various products and services, we are able to help the LPs choose the best way they can invest and choose the best method of investing. Therefore, the LP with us in this entire process can grow together and actually achieve something creative and something successful.